These financial sanctions, obviously, the U.S. banks don't have as many ties to some of the Russian commercial loans as some of the European banks do. But is there an impact here? How big is it? And how do you kind of differentiate between the U.S. banks?
Well, Becky, they do. And these sanctions are significant and directly, but most of the U.S. banks kind of exited Russia with the annexation of Crimea in 2014. Citigroup, which we can talk in a moment, a little bit more exposure, but it's the correspondent banking relationships through Europe, which do quite a bit of loan activity, Italian banks, French banks, Austrian, with Russia. And you got to kind of think about this like the Foreign Corrupt Practices Act. The Foreign Assets Control Department of U.S. Treasury is going to be expanding dramatically, and U.S. banks will be compliant. The other part of the story here for investors, for banks, is we really had a clean economic recovery path, and banks as cyclical value plays. We're going to do fine as stocks, but this kind of ratchets some of the global economic growth. But right now, sanctions are top of mind.
The other issue that we've got to be considering right now, Ken, is how the Fed reacts to all of this. Does the Federal Reserve look at this and say, uh-oh, we don't want to push things into a recession, so maybe we need to tread a little more lightly? Or do they look at the higher impact from higher oil prices, higher commodity prices, and say this is going to be bad news because it's additional inflationary pressures that they're putting into the pipeline that will extend that inflationary period? What do you think?
Already, the market has spoken. So the 10-year bond has come down, treasuries have come down. The Fed, of course, has the inflation mandate, so they can't lose sight of that. But, the notion of a 50 basis points increase, in rates is probably off the table. And I think the narrative or the tone, which, of course, Steve Leisman will get to, when we get the March 16th meeting, is going to be much more concerned about geopolitical risk with Russia.
You still have buys or strong buys on most of the banks, with the exception of J.P. Morgan Chase, where you have a hold. Does any of this change your perspective? Are you rethinking any of those buys?
So, the banks, again, fit into that cyclical value play. They are trading at 65% discount to the S&P 500, and they do have a clean path of rising rates over the next 2 years. That's the bull case. A little bit worried about Citi, Becky, and Jane Fraser, the new CEO, probably wished that they divested consumer banks in Asia and in Russia earlier, 10 billion of exposure in Russia. You know what, Becky, they got Investor Day coming tomorrow. So there's going to be a lot of attention to Citi. And that, to me, was a great restructuring play. But anytime with U.S. banks, you have to play more weighting to outside the U.S. As you can see here today, there's more risk.
Shepard Smith here. Thanks for watching CNBC on YouTube.